Breakouts can be some of the best trading opportunities on a chart, but there's one big problem. A lot of breakouts fail. Price breaks above resistance, pulls traders in, it looks like it's the best move in the world, and then it reverses. That's why I decided to create this video, because I want to show you practical ways to confirm breakouts and reduce the chance of getting caught in false breakout trades. Before we start talking about breakouts, the fundamentals that you need to know is support and resistance zones. This can be horizontal support and resistance zones as well as certain trend lines. Because if we are dealing with breakouts, we need to be able to identify these support and resistance. So on this chart, I have multiple touches at certain zones. So this line here, this trend line, shows the resistance area. As you can see, there are plenty of touches. This one here, it's almost horizontal, but it's slanting, but this is a support for this consolidation price. And then eventually the support gets broken. And then this support one became the resistance, a future resistance zone. And here's the next support zone. If you want more details about support zones, I have a separate video where I talk specifically about that. Now, the real question is, what is a breakout? A breakout happens when price moves through a support or resistance level that the traders are watching and then pushes on. Breakouts matter because they can signal the start of a new move, trend continuation, or a shift in momentum. But the key issue is not every breakout is worth trading. That's why we use certain confirmation techniques to maximize our chances of trading a real breakout and not losing money on a false breakout. The first confirmation signal is for you to wait for the candle to close above the resistance area or below the support area depending on your chart. Here we have a clear resistance area. We've got the 1, 2, 3 touches, and then here's the first candle that it's a strong candle that closes above the resistance zone. This is a signal. Now I need to focus on the candle close. Just a wick like this is not good enough because, as you can see, the price goes into this new territory and then has a tendency to come back down. So we need to have a full strong candle closing above. Just an important note, a candle close alone is still not enough to guarantee the breakout will work. This is just the first confirmation signal. Let's move on to the next one. The next confirmation involves using the actual volume of the price movement. Here's a really good example. We have a resistance area over here and we're looking at the volume. So the candle, it actually closed above the resistance area, but the volume here, it was slightly higher, but volume is actually lower than it was over here. So it's nothing significant. So we ignore it. We wait until the next touch of the resistance area. Again, nothing happened here. And as you can see, low volume. And then here is the first time we have the candle that closes above the resistance area. And notice what happened to the volume. It almost doubled, and it wasn't just like a one-off bar that doubled. We have a significant doubling of volume. You cannot ignore this. It's like a 70% increase in volume. So this is a good indicator to show you that a potential breakout is real instead of a false breakout. The next confirmation signal is actually a very simple strategy, and that is trade with the trend, never against it. What I mean by this is use a, say, 200 period moving average, can be a simple moving average, and if the price is below, then trade breakouts that are bearish. If the price is above, then trade breakouts that are bullish. So for example, here we have 1, 2, 3 touches, and then finally we have the breakout candle, which means we can sell it because the price is below the 200 period moving average. price came back up here, but then over here I have identified another support zone with multiple touches, and then price breaks below it and then moves a little bit further down. Just to clarify, I'm not saying that counter trend breakouts never work, but if you want to improve your probability, trading in the direction of the broader trend is a very useful filter. And here's another confirmation signal. I would say this one is my favorite, but it requires a lot of patience. Actually, a very big amount of patience. I have identified a support zone here. I have multiple touches. There was a fake breakout here. Price came back within its zone. And then finally we have the breakout here. So what you do is you wait for the breakout to happen, and then you have to be patient, and then the price will return to the breakout zone. Sometimes this means the price will come close to it. Other times it means that the price will come and actually touch this support. So the support gets broken and then it becomes its own resistance area. So the price breaks it, comes back up, touches it or comes close to it, and then shoots down. The benefit of the retest approach is that it can reduce false breakouts very effectively. But as I mentioned before, the trade-off is you have to be very patient with this, and also you will miss a lot of breakouts. However, the breakouts that you do take, there is a bigger probability that they will go in your favor. And that's it for the practical ways to confirm breakouts and reduce false breakout trades. The key idea is not to treat every break of support or resistance as a trade. Instead, wait for confirmation signals. This can be a proper candle close above the resistance area or below the support. Strong volume, that's a very good indicator. You have trend alignment. Don't take trades against the trend, just with the trade. If you found this video helpful, then subscribe for more TradingView and trading tutorials. Thanks for watching.